TJ, the Wheel Deal coming at you live. It is, what are we today? Tuesday. It's Tuesday. Tuesday, April the 8th, 2025, Central Time, Texas time. Shout out to my nephew, Justin. It is his birthday today. I don't know how old he is. Let's see. Let's try to do some math. I think he was born in like 92, something like that. Then I was still in high school. So 92, 2002, 2012, 2022. I think he's 33 years old, something like that. So I'm going to wish him a happy birthday real quick. Let me send him a text. I just really remembered. And then we'll go from there. Justin nephew, happy birthday. There we go. So happy birthday, and it's official. Siri found her birthday. So there we are. So I'm off the hook. I'm off the hook. Let me see. I think Sergio is going to join us today. I'm waiting to see if Uzi Options is going to join us. Link is in the chat. Anyway, let's get started, guys. Let's get started. I appreciate you guys. We've already got some folks tuning in. 145 people have seen the link on X. 13 people rocking live on YouTube. I know that number's going to be a little bit light because our boy Amit is on right now. So I was watching him earlier today. But anyway, appreciate you, Taiwo. What's going on? EdgeX. I'm doing well. Anyway, for those of y'all that might be new to the channel, my name is TJ the Wheel Deal. I sell puts, I sell calls, I collect premium, I roll when it makes dollars and cents, and I'm pretty good at buying the timely leap. I've been at this game for a while, full-time, going on 5 years, been invested in the market since 1997. So I've seen a lot. I've seen a lot in the market. But the one thing that I know to be true above anything else is the people that enjoy the most success in the market. It's a lot like the same characteristics as people that enjoy enormous success in life in general, whether it's, playing sports, your profession, your marriage, parenting, whatever it is. It usually comes down to one critical component. And that component is consistency. So Aristotle, one of the late great philosophers of our time, or of his time, is we are what we repeatedly do. Excellence then is not an act, but a habit. It's about consistency, guys. It is simply about consistency. And there's some people that are more consistent than others. They just are. They just are. There's another quote I was trying to find for you guys. It's with this John Maxwell guy. He wrote a lot of those books that we are, familiar with. So I'm going to try to find it for y'all. So I'm going to do this. Let me go here. I'm going to go hit present, share screen, and y'all will see me scrolling here. It's quotes about consistency. So whenever I find it, I will, point it out. So there's one by Dwayne Johnson also that I liked a lot. And I'll see if I can find that one too. Here it is. So I'll make this a little bit larger. So it's, oh shoot. I don't know. So here we go. Quotes about consistency. So this is one with Dwayne Johnson that is really, really cool. It's success isn't always about greatness. It's about consistency. Consistent hard work leads to success. The greatness will come. And there's another quote that kind of like ties into that. And it's like, you don't have to be great to start, but you have to start to be great, right? So there's one of those things. It's just one of those things. It's about being consistent. And there is a longer quote that I'm going to try to find real quickly. And it's with that John Maxwell character. That's a good one, too. Hopefully I can find it. If not, it's all good. Here we go. Small disciplines repeated with consistency every day lead to great achievements gained slowly over time. And here's another one right here. Motivation gets you going, but discipline keeps you growing. That's the law of consistency. It doesn't matter how talented you are, it doesn't matter how many opportunities you receive. If you want to grow, consistency is key. I have my buddy Carlos Murray, who is just built like a Greek god, but he's consistently in the gym. He's consistently monitoring his diet. He's consistently doing that. It's a real big part of who he is. It's a real big part of his life. He's consistent with it. Whenever I was, actively powerlifting in college, and I, won my first national championship, and then I found out that you could try to do the world thing and whatnot. I was just like consistently working out and like really doing that deal as a lifestyle. I was consistent with it, guys. So I've never achieved anything in life without being consistent, is what I'm trying to tell you. On the market, it hasn't been any different for me. Like I consistently sell puts, I sell calls, I collect premium. That's kind of my go-to move. I roll when it makes dollars and cents, and I buy the time to leave. Those are the things that I try to do consistently in the market. I'm consistently studying the stocks that I'm in or the stocks that I want to be in, why I want to be in them, etc. Do they have the moat? What's the market sentiment like? Do they have the money? How's the management? I'm consistently doing those things. And then I'm also consistently looking at, okay, this is where the money is allocated. How would it look somewhere else? How would I feel about it, etc. And then eventually you get to a point, kind of like where I'm at now, and you got your horses, like now it's like I've got the 4 horses, right? I've got Star, SoFi, Tesla, Amazon, Riot, and it's like the horse is pretty good. It needs a little bit of a vet check at times, right? To make, because sometimes it's lame and limping around in the pasture, not performing well. So I just kind of like analyze it a little bit. And I'm like, do I really need Amazon? Do I not need Amazon? That kind of thing. Do I need to have the 150,000 shares of SoFi in the big tasty account, or do we not need the shares? Maybe there's a different way to get the exposure to the shares. So I'm just tweaking it, but essentially I landed on the horses. So it's going to be real hard to replace one of those horses, if that makes sense. So then now it's like cause collecting premium, rolling with dollars and cents, but I'm like, well, I need to add a little bit because I don't like to buy puts. It just doesn't feel good for the soul. So I'm permeable, right? So I'm like, well, how about selling naked calls, trying to go get some of that money. So that's something that I've consistently started doing. Been doing it for a while, but on camera, not very long, right? A couple of weeks, y'all have seen me do that. And that's bringing in some more money through the door consistently. Does it come with the massive upside risk? Yes, but I also have a plan in place to deal with that, So it's one of those things, guys. So anyway, guys, got to be consistent. And whatever it is that you want to do, if you want to have success with it, you're going to have to be consistent. That's the moral of the story there. So now let me also present the options that we got going on. I consistently do this on a daily basis. So I'm going to feature this sheet a little bit more when we start. And then I'll go over to the Tasty Trade platform because I just feel like she doesn't photograph well. Like I can't quite make it as big, etc. It's a little bit tough on the eyes. It's a very busy platform. So I'm going to talk about the options here, and then we'll go over to the Tasty Trade account after. And I found a way to make it just slightly a little bit bigger. And I just think it'll be easier to follow, in my opinion. And I'm also going to change that banner. I think we've had it on there enough. I'm going to put the banner here. And this is the banner right here. So wheel deal steps for a wheelie. So let me see if anybody is waiting in backstage. Not yet. Let's get going. So what's going on up here? So here we have ticker, we have trade type, we have strike, we have current share price, we have number of contracts, premiums received, expiration date, status, whether it's out of the money, in the money, the total collateral, if it's a cash secured put, potential market value, if it is a covered call or even a naked call, and the notes. My okay assignment, if this is the premium cash grab, it's a naked call, obviously I have to defend and roll. I'm okay playing it out. If it's a backstop trade, whatever, like I put some little notes there, kind of like a real quick journal entry, if you will. So let's start with the first one. We've got Amazon covered call, 210 strike. It's currently going for $181 according to this, and these are this is not, it's pretty close to being real time as far as the ticker goes in the price. So that's probably going to be pretty accurate. If not, well, it is where it is. But according to this right now, Amazon is going at $181. We have 100 contracts, premiums received are 16,600, expiration dates 5/16. So it's currently out of the money. Potential market value is 2.1 million, and I'm okay with the sign. That's what's going on with Amazon. CleanSpark, this is a premium cash grab, guys. So it's a CleanSpark cash secured put with the strike price of $6. It's currently going for $745. It's 2,000 contracts, collected $52,000 in premiums. 5/16 expiration date. It's currently out of the money. It's $1.2 million in collateral. So I also took an additional risk in case if I wanted to position myself to maybe take ownership of these shares, as I was like, well, let me go ahead and sell the other side. So I brought an additional $44,000 of premium through the door by selling naked calls. So I turned this into a strangle, if you will, on 2,000 contracts for the same expiration date. So now I'm like, okay, if I wanted to take assignment of the shares at $6, if it tanked, the premiums that I received over here on the naked calls are going to lower my adjusted cost basis from the jump. And that's why moving over to Tasty Trade was so critical for what I was trying to accomplish, because with our beloved Robinhood, you're just not able to do that. You have to let it all play out over here. You've got the $1.2 million tied up, and the only thing that you can ever make is the $52,000. On Tasty Trade, first of all, they don't require you to tie up the entire 1.2 million, and they let you sell both sides. So you sell the cash secure put and the covered call or the naked call simultaneously. You bring a lot more premiums through the door with a lot less money required. So it was just a no-brainer for me. It was an absolute no-brainer for me to make that adjustment. How's it going, Sergio?
Hey, how are you?
Let me go through this real quickly and I'll get with you. Give me like 2 minutes.
No worries.
Then I've got the Riot cash secured puts, $7 strikes, currently going for $701. According to this, it's 1,000 contracts, picked up $48,000 in premiums. Expiration date is 5/16. Utilizing $700,000 in collateral if that was the capital requirement on Tasty Trade. It isn't, but that's what would be required if I wanted to take ownership of the shares. So I put that on there to know how leveraged I am, if that makes sense. And I'll talk to you all about that in just a second. But I went ahead and sold the other side. Now, mind you, there is 150,000 shares owned on Riot. So I've only got 1,000 naked calls and 1,500 covered calls. And the potential market value on that would be 2.5. But keep in mind, I don't own 100,000 of those shares. So since there's naked calls involved, I always have to defend and roll those. Cash secured puts on SoFi for the distance. These are backstop trades at $10. These are currently out of the money. Picked up a cool $562,500 on that. And whenever you look at the collateral required for this, because of the capital requirements, the way that Tasty Trade does this thing, and in a little bit we'll bring on Sergio because he understands this better than me. There's an actual formula that these brokerages use, and it's the big leagues now. It's just very different than trading on a beginner-friendly platform like Robinhood. So you're able to do a lot more because you have a lot more leverage, especially whenever the account's bigger, over 175,000. They give you access to what's called the portfolio margin. And then I've got the calls on SoFi at 15 for 516, picked up another 45,000. And then I also bought some leaps. So I bought the leaps at 15 for June of 2026. I forked out $654,000. So all that goes against premiums collected. Then on Tesla, cash secured puts at 175, and these are for 516. Picked up $408,000. That's crazy. It's a backstop trade. And then Tesla did another backstop trade at 200 for 116. Sorry, I said 516 earlier. That was for 116. And it was at 200 contracts on at $200. It's 235 contracts, and picked up a crazy amount, $645,000. So just this alone is using $8 million. Theoretically, it's not really. I'm not really needing all of that money right now, but it is important to keep tabs of this because, you have to make good, and you don't have that kind of cash, you can get in a real sticky situation very, very quickly. And then I also got the 220s cash secured puts on Tesla at 220 for 516, picked up 24,000 there. That's $770,000 in collateral. And then I also have naked calls on Tesla. Some covered and some naked because there's 6,500 shares of Tesla owned. And I've got the shares for sale at 300. And it's quite a bit of contracts, guys. And that's actually not accurate. I think that number is actually higher than that. So I have to look. I have to look at the brokerage here in just a second. And then I just bought TSOL yesterday. So I bought 25,000 shares, and I agreed to sell them at $10. It was a buy right strategy. Bought them for $745, and they're currently going for $827. It's 250 contracts. And if I look at the open shares, it just gives you a real quick rundown over here too. So it's Tesla. These are the shares owned, average cost, current share price, the money invested, current market value. So I'm down 111,000 on Tesla. This thing here says that I'm up. I got to put this up over here. $2,000 on this. That doesn't even seem right. I don't think the math is right here. So I got to look at that real quick. Bear with me. Oh, it's 25,000 shares. That's what's going on. That's a little better. That makes sense. So Amazon, down on the shares on Amazon and down on the shares on Riot. So that's what's going on. And then this is the current market value of the shares, the brokerage cash. So it gives you a portfolio value of $10,499 and so on and so forth. Now, mind you, that is a net liquidation value because I'm still in the open options. So that's what's going on with the portfolio in a nutshell. Let's bring on Sergio. How are you? You're muted, Sergio.
Good. Good morning, everyone. Yeah, everything is good. Oversold rally is happening, and the movie is playing out exactly the way it played out before. Different circumstances, but nothing goes down forever, and nothing goes up forever. And getting an oversold bounce, I still don't think we're done going down, but for today at least.
Yeah.
Everybody's like, this morning I got like text saying, what is the catalyst? I mean, it doesn't have to have a catalyst. It's just when, the rubber band theory, right? Like a bungee.
Yes.
When it's stretched out as much as it has, you just got to bounce about halfway back up. And then, the other one, you just hope the cord doesn't break, right?
Yeah.
and with everything we have going, there's a lot of people are comparing this to 87 crash. It's just some bullshit, honestly. It's like, on Twitter, these fin-twits are just clueless, and then, crash, this, that. I'm like, bro, we have so many more guardrails for that not to happen these days, In 87, by the way, we didn't have the lock limit down halts and things like that. Today we're trading electronically. Those days we're trading manually. Just so many differences. And then the closest thing I can compare this to probably will be an '08 kind of a situation. But even then, we didn't have any of the tools that we have now. So yeah, I mean, we get a bounce out of this. We'll see where we go. And if you do have trash to clean up, this is your chance to clean up. Only get back into the ones that you're fully committed to, or keep the ones, even if you have losses, keep those that you're fully committed to.
Yeah.
A lot of people get into a lot of things, and then we talked about this on my channel yesterday, right? Traders becoming long-term investors.
Yeah.
Yeah.
So there's something I want to share on that note, Sergio, because it's real easy to be confident and it's real easy to be bullish whenever you're not staring down the barrel of assignment.
Yeah.
It's real easy when your options are out of the money.
Yeah.
But you'll really know where you stand when the options are in the money, and you'll really know where you stand when the options are deep in the money. And that is the inventory that we should have been able to take, right? I was on your channel yesterday, and you got to be able to do an introspection whenever your feet are being held to the fire. Like, hey, do I like this feeling? Or is it, because pressure creates diamonds, right?
Yep.
So they have like all of these terms in the stock market, like diamond hands and stuff like that, because you got to be able to hold your feet to the fire and be okay with the pressure, right? It's not for everyone. It is not for everyone. So
Absolutely
here
not.
I posted something on X here just a while ago. And so here we are. Let me like our own stream. But this is what I posted just 36 minutes ago, and it says, make it just slightly larger for you guys. Here we go. Selling options is extremely tough when you're only excited when options are way out of the money. If you don't like the prospects of taking ownership, don't sell the put. It really, really, really is that simple.
Yep.
Understand what is a premium cash grab versus an ideal setup to initiate a long position. You're welcome. And I'm sure there's people chiming in because there's a lot of experts on Twitter, if y'all don't know that. I haven't had a chance to read any of these. You can follow these people. They're making $5,000 a week or a day or a second. All the robots are chiming in as well.
Yeah, sure.
But guys, if you would just follow those simple little words of wisdom that I've learned, the hard way over time, 5 years now, full time selling options, you can tune out a lot of the noise if you're selling puts and calls on stocks that you genuinely want to initiate a long position, a price that makes dollars and cents for you. Those are the two hardest components: is picking the stock and then understanding valuation, learning about valuation and the sector that your stock is in and how they trade and all of these other variables, and then coming to an agreement in your mind, the way that I've come to an agreement in my mind that says, if I can own a shitload of shares of Tesla at 150 to 175, there's no freaking way that I'm going to lose money in that position.
Yep.
Right? It took me a long time to get there, though. You know what I mean? It takes you a long time to get there, because if I use basic analytics, I'm talking about basic P ratios, basic PEG ratios, and PS ratios, the things that people know, right? Because what's investing? It is paying today for what you think the company is worth today and tomorrow. Because you got to buy in for tomorrow, because you got to pay because the company already exists, right? So imagine a hamburger stand that's already running. They're going to be able to show you the books and be like, hey, we brought in so much money, and now you want to participate in all future cash flows. And they're like, well, how much are you going to give me for all the blood, sweat, and tears and equity that we created, that we have here to create this opportunity for you as an investor? That's why I always like using the hamburger stand analogy. You got a freaking hamburger stand on 42nd and Broadway, right? Over there in New York, one of the busiest intersections in the entire world. Well, that hamburger stand's going to go for a premium.
Yeah.
So you got to understand, do you have Boardwalk or Park Place in the Monopoly board? Or are we fucking talking about Baltic Avenue? What are we talking about here, right? Are we talking about the railroads, nice and consistent? What are we talking about? So that is why it's such a tough game, because I look at it like the Monopoly board, Sergio, and I'm like, is this Boardwalk? Is this Park Place? Or is this just one of the utilities that is a safe play? It's going to bring in some revenue, but we're not going to get rich. We're not even putting hotels on there. You know what I'm saying?
I mean,
So,
great analogy, honestly, because so first of all, I think a lot of people, honestly, they do it because they want to get rich quick, right? Their
yeah,
timelines don't match their psychology, right? Because look, social media exists, it's a wonderful thing. In some cases, it's a horrible thing. In other cases, the point is, when you do this for a living, right, versus having a W-2
yeah,
and not being able to look at things, right, and analyze things, and that's the difference. Number one. Number two, though, this this is not a sprint; it's a marathon. Especially, look, there are things that you can sprint with, such
yeah,
as you could do zero DTEs and weekly options and
yeah,
directionals and things like that. But in general, selling puts, right, and selling calls, you need to have patience. The reason for that is because there is time decay, right? You need to allow that time to work for you, but
yes,
most people don't have the patience. And what you just said, at the start of your, conversation, is that when you're deep in the money, you sell a put. And in this type of market, you are going to get deep in the money. There is no ifs and buts about it. Stock's going down 10% a day. Who cares if you sold a put or didn't sell a put?
yeah,
If you have that sick feeling in your stomach and you're about to get a margin call, that means your sizing was not correct.
facts.
So a lot of people do that. A lot of people are used to it, and there's no sizing, ideology, because, like, you were mentioning, a lot of brokers, when you do sell a put, their margin requirements are different than a cash secure put.
Yes,
You said it yourself a million times. On Think or Swim, you could get into trouble
yeah.
because they will let you do a lot more size than you did, at Robinhood, right? Well,
On
the point is
tasty trade.
tasty trade, right? So the thing is with that is, people don't even know what it takes to sell a put and what the requirements are. And then
Yeah,
they see, oh, it's only taking me $5,000 buying power to do 10 puts, selling 10 puts.
yeah,
You know what I mean? Well, actually, it's not, because if you multiply that with the stock price, if you do get assigned, you're going to need a lot more money to
yeah.
buy that stock. Just because they let you do it in a margin account with much less money don't get fooled. And that's when the sizing problem comes in, right? Because if they're a 5-lot trader, 10-lot trader, they put in 30 lots on, and then it goes deep into money, something happens, and now you're looking at a margin call. So
Yeah,
sizing is key, patience is key, especially if you can sell puts for many different reasons. My thing is, I can sell puts for hedging my shorts, right?
yeah,
If I'm short stock, I sell puts. You know how you do a cover call? This is a cover put. You short the
yeah,
stock, you sell the put, or you buy the stock, you sell the call.
yeah,
That's one way. You can sell a put to own a stock at a later date at a cheaper price, like you do, right? Many different reasons to sell puts. But
yeah,
if your reason is to speculate to sell puts, which most people do these days, then you need to understand all the Greeks. You need to understand implied volatility. You need to understand. That's why Tasty Trade, I think, is amazing, right? Tom,
yeah.
those guys know this. They wrote the Bible of this thing. You know what I'm saying?
Yeah, he's the
So
godfather
that's
of
why
us.
they put on 42-day trades and cover it at 21, because that's where the maximum decay is. Because most people go, oh, I'm going to let it expire. By the time that thing expires, the world come to an end, So
Yeah,
my thing always has been, why are you selling puts? Do you have the money to buy the stock?
yeah,
Actually, do you even want to buy the stock? Or are you just speculating? Know who you are, size correctly, and then commit to it. If you're right, you're right. If you're wrong, you're wrong. If you're wrong, take your loss.
Yeah.
Don't let it get so deep in the money that say, oh, I'll be okay. I'm like, no, you won't be okay. You
Yeah.
are not going to be okay. You're going to blow an account here and there, and then you're going to not come back. We want all of you to survive these types of markets because, look, most of your chat probably has not seen anything like this ever, right?
Yeah.
And if you survive this, guys, gals, you can survive anything. It's like the Frank Sinatra song, right? If you survive that, if you survive New York, you can survive anywhere. That was a tough one, I'm telling you. I
Yeah.
kind of expected it, not to that degree, but then there's so much leverage in the system that it happened. What happened, right? A lot of people talk about tariffs. I don't think it had anything. I mean, I think the tariffs was like the match on the Tinder box. It just
Yeah.
started the whole thing, but it was ready to go because the underlyings were super weak, even starting last November.
Yeah, it's
But
just, I
then,
mean, you just look at historically the P/E ratio of the S&P 500. I mean, it's like two or 3 points higher than it's ever been. Like this shit is
yeah,
frothy. The things are expensive, guys. I mean, I'm talking
yeah,
about, and then there's a Warren Buffett indicator. If you look at this Warren Buffett indicator, like I don't want to like go too deep in the weeds with this thing, but stocks have been overpriced for a hot minute here, and I just
yeah.
think that,
Well, allow me to talk about that for a minute, right? So
yeah,
for this year, when SPX was 6,100, everything was priced in for perfection with a 23 PE for this year's S&P 500 earnings of 270. That were the estimates, give or take a couple of dollars here and there. We're talking $270. So if you took 270 multiplied times 23, you're going to get to about 6,100, right?
yeah,
So with what's going on now, with potential capex delays, with all these, to see the tariffs introduce the uncertainty part of the game now. We have earnings coming up. Banks are starting this week. Then techs are coming around. All this stuff is coming up. I assure you, every single earnings call you hear is going to be the T word: tariff, tariff, tariff. You know how when things were bullish, everybody was talking about AI, 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 right?
absolutely, yeah,
And so to me, so 270 is the earnings estimates. As most of you have read, a lot of brokerages are ratcheting down their targets for S&P 500 this year, of course, because that's what they're good at. It happens, and then they do what they do. But my numbers are, even if we get a 10% reduction in earnings this year, because we're going to go into a slowdown, that's 250. Okay. So you put the same multiple. Well, 23 is high, extremely high. Average multiple on the PE. We're just talking simple, basic stuff now. Average multiple on the S&P 500 is about 16 to 18. That's with interest rates going down. Okay, let's say interest rates stay flat. You put a 17 PE on 250. Pretty simple, really. You just take 17 times 250. That's 4,250.
yeah,
That's where S&P should be if we go in a recession or if we go in a
right,
massive slowdown. And now you have earnings coming out because, see, a lot of people are thinking about this V bottom now. That's going
right.
because of today, right? It's going to just bounce right back up like COVID did and
The
all that
V-shaped
stuff.
recovery,
It ain't
COVID.
going to happen that way. What's going to happen now? You're going to need at least a quarter for all these companies who are going to get affected by tariffs,
Yeah,
right? To see where their earnings are going to be. So what are they going to do? They're going to cut capex. They're not going to make new investments. So we have a couple of 3 quarters probably of this probably very wide trading range, right?
mhm.
Yesterday was the low. I mean, I'm a kind of quasi technician. Literally, we bounced. We tagged the intermediate term uptrend literally to the point, to the penny, and then we bounced. But I see the S&P going down to 3,800 to 4,200 when this is all done, if we go in a recession. We don't
Right,
know. But so you have some headwinds here, right? It's not
agreed.
just the tariffs. Tariffs are just tariffs.
Yeah, I
Most
think
people,
I think one of the headwinds that is a real thing is this market has been frothy for a long time, guys. This is something y'all can pull up. Just Google the Buffett
yeah,
indicator. It is
yeah,
something that I've been using from day one. I just don't talk about it on the channel because of the kind of stocks that I trade. So like this guy doesn't think about value. I actually do, but from a more macro perspective.
Yeah.
I zone in on my horses, but I look at the big picture. And the Buffett indicator is really simple, guys. It's something that he came up with years and years ago, and it's as true as the day is long. It's as honest as the day is long if you think about it.
Yep.
So it is simply the ratio of the United States stock market to gross domestic product, the Buffett
Yep.
indicator. Total U.S. stock market value divided by the gross domestic product. And as of December 31st, 2024, the ratio values are the total US stock market value is 62.29 trillion. The annualized gross domestic product is 29.55 trillion. So the Buffett indicator equals 211%. And then it just goes on and on and on. So why does it matter? The Buffett indicator expresses the value of the US stock market in terms of the size of the US economy. The stock market value is growing much faster than the actual economy, then it may be a bubble. And you guys can just go over here and you can figure out what it means to you. We're not going to turn this into an economics class.
No, for sure. But you know what?
I wanted to point y'all in that direction. So
For
people
sure,
are
yeah.
always asking, and Buffett knew he went into cash and all that stuff, and he's using his own tools. You know what I mean? Like he used his own tools, and he's like, this shit is not sustainable. You have the gross domestic product that is kind of flat, but the stocks just keep going up and up and up. So there's just the math doesn't support those valuations. So this dude was like, I'm going to raise cash. And he might also be at the end of the line. These are just my own personal things now, right? Now I'm speculating on why he did it. I think the main reason he did it was because his own indicator said this shit is not sustainable, because the economy, we may even potentially be in a recession. So how could stocks be going up, right? So there's a disconnect there. The yields have been inverted for a while, off and on, right? For the last couple of years now. They redefined recession, what a recession means for the history books, for the economics books or whatever going forward. Like we redefined recession. What was it in 22? I think that we redefined recession.
Well, we didn't get the recession in 22, right? Market went down 30-40%, but not every market drawdown results in a recession.
Right.
Okay.
Agreed.
So the technical terms, is 2 quarters negative GDP. But according to that indicator, right? So about 20% of the market cap that he's talking about got cut, right? So the only thing that's standing at the moment is that 29.55 trillion GDP. Well, if we do get in a recession, that's going to go down as well. So the gap may not close just because the 62 trillion part went down, right? So his indicator still is going to be pretty high. Yeah. So that's why a lot of people go, when Buffett starts buying, we're going to buy, but we're going to bottom. Not necessarily. First of all, Buffett is 94, 95, 94.
Yeah. So I think the other reason he went into cash, Sergio, is because for the history books, because I think this man really, really values his legacy.
Absolutely.
And for the history books, if you get into cash, you close a lot of things out, you're going to accurately be able to tabulate this is where he landed, right? Like this is where the eagle landed.
You started cash, you died cash.
No, what I'm saying is this is how much he made. You can accurately quantify it.
It's ridiculous.
There was a lot of trades that had to play out. You follow me? It's kind of like whenever I moved over the money from Robinhood to Tasty Trade, I closed everything out. I put it 3.3 in cash, and I had 4 stocks. So it was an accurate. This is how much money we made on Robinhood. You follow me? Like I was able to give you an accurate tally, if that makes sense.
Yeah. No, so I
think that because he is very, very aware of his legacy, it was like, hey, well, let me just, my best friend recently died, so God's probably going to call me home here soon too. Let me just put an accurate tally on my legacy and then call life good, right?
Well, to be honest,
this is just me speculating, right?
He has different money managers already, younger guys that are taking over. Obviously, maybe I don't know how day to day he is, but look, he's looking at it this way: risk-free 4%. He's all in T-bills. Risk-free 4% versus this ridiculous risks that we have that was just created with this. Tariff thing, this other thing, that thing, this thing, Federal Reserve, problems between Trump and the Fed. Look, he goes like 4% risk-free is a lot better than being in stocks at the moment, while my own indicator is pointing, red, So look, Buffett is Buffett. Buffett's going to do what he's going to do. His managers are going to do what they take over when he's gone, and they're going to do what they're going to do well. They're value investors. They're not like us. Like Buffett will never buy a Tesla. It took him 10 years to buy Apple. You know what I mean?
Right.
So to me, it's like that's a different animal altogether, because most of us younger, and your chat I'm sure is younger than both of us too, they're looking at this fast, how do I get rich quick, this kind of a thing. It's just look at, on that one they should follow Buffett, right? There's investing and there's trading, and
Right.
Buffett is an investor, he's not a trader. You have to figure out who you are. You could be both. You could have an investment account, which I do. You could have a trading account. And you treat them differently, because trading is not investing, and vice versa. Investing is not trading. So by selling puts like you do, you're investing. You have a company, you have a thesis, you structure a trade around it, you're committed to it, you stay with it. Period.
Facts.
Now, until underlying, stuff changes with your thesis, you stick to it. There'll be bad days without a question, and there'll be a good days. But overall, if that plays out over the duration of all your expirations, then you should be okay. But you have a plan, right? The 3 P's: patience, position, and plan. You have a plan, you're executing your plan. And it's going to take 6 months, a year to execute that plan. But most people go like, no, I just want to make $5,000 a day. How are these people doing it on YouTube, or how are they doing it on Twitter? They're not doing anything. I mean, people, seriously, other than TJ and myself, nobody puts their P&Ls, nobody puts their positions on their YouTube channels.
Yeah, agreed.
All they do is talk. But
Agreed. And you're saying a lot right there, Sergio, because look at our favorite YouTubers. And then I want you to post on there how many shares does so and so own of what, and at what, and where do they stand. And so they're just, there's a thing, guys. There's really good channels on here. I watch them too. We all watch them, and they're real good at talking about stocks.
Yeah.
They're like little mini CNNs and CNBCs and stuff, right? Like that's just what they do, because there's a lot of money, and not a lot, but there's some money in doing it, and they probably just enjoy doing it. But there's very few channels that actually be like, okay, that's all fine. You can go get that data. That's not what we're going to do here, but we're going to show you how we're trading the market. This is what we are doing. So these channels are extremely unique. These are extremely unique.
Yeah, I think a lot.
We show you this is the market we have in front of us, Sergio, and this is how I'm trading it. These are my plays. What are your plays? Because at the end of the day, that's kind of what we're looking for here, right? It's like, how can we make money?
Well, the thing is that, size, like you're doing at a size that is comfortable for you, right?
Yeah.
You could be doing like that guy says 3 shares, or you could be doing 30,000 shares of Google. It doesn't matter. It's the account size, and if you're comfortable with that, you're comfortable with that. I don't care honestly about all this, people on YouTube or Twitter, or they become their own, news channels, like you said. Again, you read the news, I read the news. I interpret it completely differently than you, right?
Sure.
And then now I have to have enough tools in my knowledge toolbox to structure trades around what I'm seeing, because the price is the price. A lot of people argue with price. Market is the best pricing mechanism. What you see in front of you is the price.
In fact.
So you can argue all you want. You can have emotional attachments. You can have, like a lot of people have emotional attachment to Tesla for one reason or another. Oh, it shouldn't be 230. I'm like, why shouldn't it be? That's the price. There is a shit ton of seller at 230. There's a shit ton of buyer at 230. They're agreeing on that price, and that's that second's price. So don't argue with that. Now, does market price things incorrectly once in a while? Absolutely does.
Yeah.
But then in that tornado, you could get killed a few times before market just figures out that, oh, market is wrong. You are right. We're going to bring it back to what it should be. And that's what Buffett does, by the way. Last talk about Buffett. Buffett figures out when the mispricing happens, and he loads up the boat. And when it comes mean reversion, then he makes all his money. That's how he does it. That's how he made all his money in 2008. He went and saved Goldman Sachs, for God's sakes, right? So I'm going like, that's a different strategy. But for us, little guys, you need to learn. You need to have knowledge base. What is your trading or investing knowledge? What does it depend on?
Right.
Like, is it because some guy on YouTube said, I love Tesla at 230? If that's your reason to invest, you need to go back and read some books and come back and do it right, especially if you're in your 20s, because you have 40 years in front of you. You don't have to get involved in any of this. Just DCA, dollar cost average into an index. In 40 years, you'll be much better off than anybody, because the market, it cannot be beat, even with the pros, with all their MBAs, with all their computers, with all their HFTs and all that stuff. Okay. Very few people can beat the market. And if you are in the market, your goal should be to beat the market by 3x at least. So last year, when the market was up 25%, if your account did not go up by 75%, then just invest DCA in an index. You will be fine. Over long periods of time, you should be fine. But a lot of people, they get pushed and pulled with all this stuff, and they get excited, adrenaline rush, they want to be involved somehow. And to me, it's like, yeah, you could do that. You could portions a size of your account, trade and do whatever you need to do. And then, but always think of investing. And especially when you're selling puts, like TJ is doing, he wants to buy these things. He wants to own the company. He wants to own shares. He's not doing it to speculate, right? Correct me if I'm wrong, but that's the idea I'm getting from you.
When it's a cash grab, I'll tell you, because I will sell cash secured puts as an income generator. But if I have to own that stock, I'm pretty good at picking a strike that I'm like okay with, and also an aggressive cover call. If I have to take assignment, if I don't feel like kicking the can down the road, and I'll try to get out of it because I'm raising cash so that I can go buy, a higher conviction stock, if you will. But I don't do that very often, man. In this market, you don't want to be cash grabbing, because you will turn into a long-term bag holder, and you're gonna try to convince yourself to like that stock.
Look, we talked on my channel yesterday, right? Yesterday, I put on tons of synthetics on my trading account, right? Guess what? This morning, they're all gone. I collected 30, 40, 25%, and I'm done.
Right.
That's trading. That's cash grab. But then 3 of them I kept because I want to own. I really want to own those stocks.
Yeah.
So you have to, even in your own trading account, you have to kind of make sense of, okay, I did it on 8 different stocks. 4 of them are just cash grab, but 4 of them I really own. So I'm just going to hold tight until May 16th, right? And if I get put, I get put. If I don't get put, no problem. Then we'll do it again. But that's the thing that I think people need to understand, that why are you here? Why are you doing what you're doing? And figure out who you are. And not everybody, again, he said it, TJ said it. This is not for everyone. This is not for everyone. 95% lose in this game. You guys need to understand that. Yeah. And if you have this short time horizon, and you don't have the tools, when a crash happens like it did, you're going to get blown out. And, so, again, not being negative, it's just that's the way markets work.
Facts.
Markets are here to make everybody wrong. Everybody. That's my mentors used to say that. Markets are not here to make everybody rich. But
great. So let me get some feedback from you here, Sergio. So here the cash balance is sitting at 5.8, the brokerage cash, if you will. So that's the first metric I look at every morning. Okay. It's like, where am I at? Right? Everybody's like, oh, let me look at the investing balance and the P&L. No. Where am I at? Because I need to know, okay, I got 5.8 because I have a lot of cash secured puts. What could I afford to take ownership? What do I need to kick the can down the road, etc.? But I only want to focus on 2 positions here. Okay. Because one's an investment and one's a trade. Okay. So I had Tesla. I got 6,500 shares that are owned at 261. It's currently going for 243. So down 116,000 on the actual shares. Okay. And then there's components, right? So there's investments, but you can trade around your investment, right? Okay. That's what I do. I sell puts and calls around my investment, essentially. Okay. And I roll when it makes dollars and cents. So I've got 35 cash secured puts at 220. Okay. because that would take us theoretically to 10,000 shares of ownership, and I would be lowering my cost basis on the shares, my average cost, ever so slight. Not a lot, but probably like $5 or something.
Are those
So,
May? Are they
yeah,
May?
for May the 20th. So the strategy here is to let it play out at least another couple of weeks and see where I'm at.
What'd you
And
sell them
then,
for?
I'm sorry,
What'd you sell them for?
I got $693 a contract.
So $7, let's say. Okay.
Yeah, and they're currently going for 1657 because when I did this, Tesla was trading at about 265.
Yeah. Well,
So
the other thing happened. The other thing happened is that IV just expanded immensely. So
yeah,
that's one other thing. Here's a lesson, people. Well, we're going to do this, but listen up. Here's a question for the chat. You own a stock,
yep,
okay? Or you own an option on a stock, short or long, okay? Can that option double or triple without the stock moving 1 cent? Here's the question. So
yeah,
we'll go through. Can it or can it not?
it
It's yes
can,
or no question. It's not a trick question.
it can.
It definitely can because IV expands. That's the most important part. And then, stock may even go against you. Actually, the underlying may even move against you,
No,
and still, the calls and puts will expand because IV is just going through the roof. And with VIX at 50, that's why those puts, because those puts should not be. But then they're going to hit IV crush any second, especially if they go sideways. So
right.
okay. So we got
So
that. So
there's that.
do you want to own those? Do you want to buy
I
those?
know I want to own them at 200, but I sold them at 220, and I'll manage them. I'll roll them to 200, and then give me some
Okay.
200. So that's
Okay.
the game plan. I already have a game plan, and it's early. There's 38 days to expiration. I'll really consider managing this 21 days. It's the Tasty Trade way.
Okay.
But it depends on where I'm at. But I want to keep lowering from 220 to 215 to 210 because if you get away with it, I want to maximize my premiums. But at the same time, whenever I do have a 200 handle on there, then at that point, I just want to let it play out because I do want to get to 10,000 shares.
Okay.
Now the market tanks to like 150. I'll obviously manage those 220s. I'll kick the can way down the road and I'll just go buy the damn shares at 150.
Well,
So,
yeah.
so that's the game too, right? I'm not going to pay 220 when I could go get them on the open market for 150, but that's not the case right now because they're going for 244.
Yeah.
That's one part of the trade.
Okay.
The other thing that I have is I have 400 calls at 300 for the same expiration date of 5/16. So
Okay.
I want you to use your expertise there, Sergio, because if I own 6,500 shares and I have 400 quote unquote covered calls, we obviously know that 300 and whatever that the number is, 65 to 335 of those are uncovered, right? So
Well, yes and no, because you have the naked puts as well. So
right, but can you explain just on the surface? Can you explain at a very elementary level what are the gimmies and the gotchas here? What is the risk? What is the reward? Because essentially, I'm creating a spread, a sweet spot, if you will, of $79.99 right there. If it's
well, you have a strangle on. But what other puts are you short? What other puts are you short?
in the distance, January of 2025, I call this my backstop trade. This is language that I use.
Okay.
I have the 175s and the 200s for January.
Okay.
And a lot of them, 435 of them to be.
Well, I mean, being so 6,500 of the 400 or 6,500 shares, so that's 335 shares, right?
Yes.
If I look at with the long dated puts and the May puts that you have sold, I can see how many do you have on the long dated puts?
200 of them at 175 and 235 of them at 200.
Okay, well, so your requirements are not, first of all, his requirements are not going to be that high because he's truly not naked, because both sides cannot happen at the same time.
That is a fact. Say that again for the people behind in the back of the room.
Yeah. although being naked, I mean, you're naked on a time lapse kind of a situation, right? Because the 400 are May. So I'm just going to look at it as you own 6,500 shares. You're also short the 220 puts for May, and the 400 short calls are May as well. So
Yes.
you're naked. I would call it not totally naked, but you're somehow naked with the 300 calls, right?
I'm wearing a Speedo.
Yeah, you're wearing a Speedo. So what could happen? All right, let's take a look at that. Overnight risk obviously is there, right? So Tesla,
Go to 350 overnight. That's fine.
yeah,
That's
yeah,
fine.
and they Trump says we're going to allow Tesla to have. We're going to okay. Here's my announcement. I mean, I don't think it's going to happen, but we want to bring manufacturing back to the U.S. We're building these billion-dollar factories, and we're going to operate them all with Optimus robots. Possibility,
That's bullish.
or he's going to say all these robo taxis are allowed to drive all over the place. Stock opens at 350.
Yeah.
Now he's in a pickle. Okay, a big pickle
A
actually.
little bit. Yeah.
I mean, you potentially could, yeah. So
Yeah.
this I would not do, right?
Yeah.
What I would do is if you're going to put on a strangle, because when you put that strangle, I mean, the delta on this is pretty high. I'm assuming when you put it on, what is the delta on this on the short calls?
Yeah, they're really not that bad.
Well, not that bad now, but
Yeah. No. I put these. Keep in mind, these were actually. I guess let me give you a little more backstory.
okay,
These were actually at 350 and 375.
okay,
But my cash secured puts were getting challenged. So I
yes,
was like, well, let me go grab more money from the naked calls.
okay,
I want to collect more credits because if the cash secured puts get challenged, I really want a 200 to handle. I would be willing to roll down from 220 to 200 for the same expiration date
yeah,
for a debit because I would be using the credits to finance the debit, right?
okay,
That was the strategy. So I'm just kind of ping ponging. So
okay,
before you tell me why you wouldn't do it, etc., this is the game plan. The
okay,
game plan is I'm playing for it to stay in this sweet spot for another couple of weeks,
okay,
and then I'm going to expand the width of this trade. So meaning I want to go from 220 to maybe 210 on the cash secured put, and I
okay,
want to go from 300 to 325 on the call side. But we'll obviously have to put a June handle on it. But that's why I'm waiting for some data to come off the clock. So on
yeah.
the next one, like right now, I have 80 points, right? I have 80 from 220 to 300. I'm really looking for 200 to like 325 on the next one, and I want to keep expanding it and expanding that because that reduces some of the potential pain. The other
Well,
thing that I'm doing, is I have TSLL over here. I
okay,
bought 25,000 shares of TSLL outright as a buy
okay,
right strategy, and I have those shares for sale at $10 for 516. If these shares were to get called away from me, this is a 2 times leverage on Tesla.
yeah,
If these get called away, these go into money, which I'd be perfectly okay with. I make $85,000 there from start to finish on TSLL. So that's more money that I have to go manage this situation. If I decide, hey, I don't want to
well,
fight this thing, I need to buy some leaps, whatever the case may be, turn this shit into some spreads. There's things that you could do to mitigate. So I'm trying to generate some serious revenues on TSLL
yeah,
to potentially help me unravel a sticky situation if Tesla were to do a moonshot.
okay,
Now,
well,
but it could
okay,
go,
but
but it could go
no,
the other way too. Tesla
you know,
could
I
go to
get that, I
150.
get that, I get that, but okay, so let's look at the let's look at the tail, that's the, TSLL of the dog, which is Tesla, right?
Yeah.
So stock is what, 827, something like that, right?
Yes. It's right.
Okay, so for that to go, let's just start there, and then I'll just end up with your 300 naked calls or 400 naked calls.
330.
Kind of quasi naked. So let's, if TSLL goes to 10, you get called away, right? You did the cover with the May 16.
Yeah. It's all
Okay.
from May 16.
All right. So for that to happen, stock has to go up another $1.70, which is another 20%, right?
So these Tesla would go up 10%.
So that means that's got Tesla go up about 9.5%, 10%. Okay.
Yeah.
So you're not in trouble yet. right? But
Not
one way
yet.
to look at this is you don't even need to buy leaps. You don't need to do anything with those naked calls.
Not yet.
Well, you're naked 300, to be perfectly honest.
Right.
Not even 300 because you have the other puts, you have the vertical
Right, 'cause
strangle. But
these things would all be printing, right?
well,
If there's
absolutely. But then they'll print at a much lesser pace than those can hurt you. The naked 300 can hurt you, right?
this is also
Because
true.
honest to God, if Tesla Moonshot opens at 350, because the requirements now are so low for you on Tasty Trade, your account will get blown out. I'm not
Yeah.
joking.
Yeah, it
Okay.
could happen.
So
Yes.
what do you do? What do you do? Well, you don't wait for that to happen, and I hope it's not going to happen. But you don't need to go buy leaps to do that, right? So if you're short the 300, you can go buy 330 calls, and then you'll have a call credit spread, and then your risk is mitigated or almost eliminated.
It's a defined risk at that point.
Absolutely, yeah. So I mean, it's not a horrible thing, but at 300, with this volatility we're experiencing, it's not a comfortable. I wouldn't do that trade. I wouldn't be naked 300, 400 calls. I'd be naked, maybe, I'd be naked. Well, I'd be covered with the shares. I'll be covered with the May 16 puts you have. Create that strangle, but being naked puts going out to next year on Tesla and being naked short calls, yeah, I think that would not make me sleep that well.
Yeah.
So
So
I'm
one
not
thing
telling you
that
not to keep it at your account, but I would be really, really careful with this volatility we're experiencing.
well,
Because
definitely monitoring it. So let me tell you the initial game plans. So the initial game plan is obviously I would roll these calls, right?
Yeah.
Add quick 90 days to it, and I can add 50 points, probably even more. Keep in mind, I'm willing to do so for debits as well, because this is what is also going to be true in this scenario. If this thing shoots up, then these guys are going to print a fair amount, not in the same proportion, but I do have a shitload of contracts that are going to print over here. I'm talking about the 200, the 200s and the 175s. And then also this would have also come to fruition, which I would have made the $85,000 over here. So I have a lot of credits to work with to be able to remedy this situation. But also what I am willing to do, because I am extremely bullish on Tesla, is I would buy the long calls over here, but then I would also add I would turn this into 15,000 shares. So then I would just take a lot of pressure off of the position as well, because I'm willing to own the shares, because again, I have the 5 million over here. Remember this balance over here?
Yeah, I mean, look, this is not a it's not a problem position for you, okay? And
but it could be if it went to like 400 or 500. But this is where you got to have the entire context, right?
I don't think Tesla's going there by May 16th.
Me neither. That's why I have the trade on. But it could happen, right? What Mr. Market thinks are always, not really on the same page.
Yeah, for sure. Yeah.
But that being said, there's an additional $5 million going into the account.
You can always buy the shares and make him cover calls, man. I mean, look, there's so many ways to remedy. You can buy this.
But that would be expensive, right?
Yeah, but it doesn't matter. It doesn't matter because, I mean, look, there's many ways to, but what I'm trying to tell you, and is you have the remedy, you have the plan in case that happens. A lot of people don't have the plan. They'll be just sitting naked and they'll be like about to go into money. And they'll be like, "Oh, shit, I blew my account." I'm like, "No, man, there's so many things you can do,
Here is the flaw with the plan, though. And Sergio, you're going to attest to this. The big move's going to happen overnight, whether it's to the upside or the downside.
Yeah.
Because the news comes in, the dark pool money, which is probably more than half of the stock that is traded, guys. It doesn't even trade during normal business hours. It's the big guys making deals with themselves, called the dark pool, right? And we don't have access to that information on a timely fashion. So whenever this thing happens, it's going to happen very, very violently. But that's the optimistic point of view, right? We can also talk about the fact that Mr. Market could also say, "Hey, Tesla, you're probably not even worth $100 a share." So now that's going to create a whole different set of problems. But now I want to talk to you a little bit about gravity, right? The implied volatility smile. It's just easier to go down than it is to go up. It's a lot easier to manage cash secured puts, and I can go from 200 to like 150 a lot faster, 175 to 150, 125 on those long dated cash secured puts than it is to go on cover calls up. It's almost like you're fighting gravity, right? So that's why I've done the trade. But at the same time, this is one of those do as I say, not as I do moments. Like the reason I'm showing this portfolio position and I have Sergio on is because this isn't anything that I want anybody following me on, but I'm walking y'all, I'm narrating through, I'm giving y'all the narrative of my thought process, right? And I feel like I can handle it. And there's also a shitload of money, meaning if I gotta go buy fucking shares at 300 and then just manage those for the next year or two, sign me the fuck up, because it's Tesla. I'm that guy, right? But at the same time, if there wasn't the money and you're forced into this type of situation, my God, dude, my goodness, like this could be a real bad spot.
The worst feeling, TJ, is being right on the direction of a stock that you love and losing money on it.
But not being adequately positioned though.
Like it happened to a lot of people on Palantir, right? I mean, they had covered calls. They put them on at 40, stock is at 125. Bro, sometimes you just got to let it go. If you're that committed, don't sell calls. Just let the damn thing go, because once in a lifetime you catch that 10x move, right?
So this is all based on a thesis, right? Like whenever you do stuff like this, you have a thesis.
Yeah.
And right here, this person's saying Tesla is going to 130 soon.
Okay,
I'm not in that camp.
I'm not either.
But I am in the camp that it can definitely touch 200, possibly 175. So I'm like, if my cash secured puts are going to get pinched, I'm going to go grab as much money as I can from the naked calls. And I wanted to put myself in a situation to where two things can't be true. Tesla, as volatile as it is, as abracadabra as it is, it cannot be trading at 220 and at 300 on the exact same day. You know what I mean? It's going to have to pick something, right? So I wanted to put myself in that position, but I'll be more comfortable. And I haven't gotten it there yet, guys. I'm still building this trade out, right? I want to get to the point where I have about 150 point spread, if you will, with the same expiration dates. But it's going to take me about 2 or 3 more cycles to get there. And then I'm going to look up one day, and then I'm going to have a 200 point spread, and I'm going to just sleep like this, even though it's Tesla. Because then no matter what happens, I can manage it, I feel.
Well, what month are the short puts, the majority of them, the 200 and to 175s you have?
January of 26.
Okay. Oh, well, those are like leaps, almost like long dated ones.
Yeah,
right?
I call them my backstop trades. It's like I'll jack with those later, but I wanted to use all of those premiums now so I can sell short dated stuff. And then I look up and I'm like, holy moly, you made 40-50% on that portion of your portfolio. Right?
I would move those up. I think 300 is too close for comfort for me. Like I would move those up probably to like 350, 375 levels. Yes, you'll take in less money, but then you're going to sleep a little bit better.
You would have liked the position better yesterday. They were at 325 and 350.
Okay. Yeah. I mean, I would sleep better if they were more out of the money because of the volatility that we're experiencing. And I don't think volatility is going to go anywhere. And the point is, even if you do short dated ones, right, because of IV increasing, you're not going to suck the blood out of those for a while. You're just going to watch them double, triple, go down, go up, go down. And then I'm not concerned. I don't think Tesla is going anywhere on the upside until, look, there has been damage done. There has been, I mean, look, we're not going to deny that. There's damage done to the brand, okay? But the guy, God bless him, he's doing something that is necessary. Look, a lot of people like put these numbers out, right? And then I don't think anybody knows outside the market. The market is always right. One other thing is when you talk about stocks and you're having crash, did anybody, okay, so you were in SoFi, right? Stock is 19 after the earnings.
18.
Do you think it'll get to 8.5 in a month?
I actually put a tweet out there, and I said that I can see a world where SoFi gets to 10,
but not 8.5, probably.
No, absolutely not. You know, the thing is, the market surprises you to the upside and the downside, right?
But that's what I'm saying. So the other thing, the other thing is once in a while, it's okay to let go of a good-looking girl. Okay.
Yeah.
Meaning, like, if you have covered calls, instead of rolling up and rolling up and rolling up, all you're doing is just extending the agony. Just let it go. Let it go. Make some money. You know, for all of you in the chat, 60% of stocks cannot even beat T-bills. If you're lucky enough to be a good stock picker and pick something that's gone up 3x, like SoFi, like Palantir, take the damn profit. Take it. Stock market's giving you a gift.
Why is it so hard for people to sell winners? Because like I struggled. I sold the Palantir at $79, the majority of the position.
Cool.
And it wasn't easy to do, but at the same time, I was dealing with some underwater covered calls. I had other places where I wanted to put the money, and that was going to give me more premiums. And I was like, this valuation doesn't make any sense to me. This thing's going to eventually go to $1 trillion. I don't know when. I feel like it's going to come visit $60 again, and I'll be interested again. And it hasn't happened yet, but I'm like, well, I got Tesla now. I got TSOL. There's always going to be something, like, you know, like I think
there's
what you're
always
saying,
something. There's 10,000 stocks.
If we stay with that analogy a little bit, let go of the pretty girl.
Yeah, you got to let go. You got to, even the best girlfriends, once in a while, you got to let go. As long as they're not your wife, you got to let go of the pretty girl, because pretty girl will put you in trouble.
Beautiful. My wife's beautiful, Sergio. I'm sure yours is also.
No, I'm just saying, you know, that analogy is that you know.
But what I'm saying is there was pretty girls before that. Is what I'm saying. You know what I mean? You let them go, and then boom, you find the one that you were meant to be with. In the stock market, like, I'm super excited that I made $500,000 with Palantir. Could have probably made $1 million if I did it better.
But the conditions have changed, TJ, right? The conditions of the market is not the same as it was 2 years, for 2 years when everything went up and we hit all-time high after all-time high. Now we're dealing with completely different conditions, and you have to have the toolbox to deal with these conditions, and most people don't have it, and they're going to blow accounts if they didn't already. My thing is, making money, taking profits, paying taxes is okay. It's okay. You know, a lot of people go like, oh, I don't want to pay taxes. I'm like, no, I want to pay taxes, because if I'm paying taxes, that means I made money. If you're not paying taxes, that means you didn't make anything. That's the whole idea. Now, I don't know. I think selling stocks that you have profits on is a must.
Yeah.
That's the only way you're putting the money in the bank. You know, a lot of people say, I have loss on this. It's not a loss until I sell it. That's the biggest bullshit I've ever heard in my life. Paper loss or no loss, it's a loss. It's draining your account. What are you guys talking about? You know, oh, one day it will be okay. I'm like, no, one day it may not be okay. Okay, for example, I know you dabbled in Celsius, right?
Mm-hmm.
Okay. That thing went from, while the market was making 60 all-time highs in a row, that thing went from 100 to 20.
Yeah.
And still 35. If you got stuck at 70, 60, 50, you're selling puts, rolling puts, you're doing nothing but lose money because you love the company, you're emotionally attached. Don't be emotionally attached. Get rid of it. Close, take the loss when you need to take the loss. There you go.
Yes, race car.
There you go. Take the loss when you need to take the loss.
I lost like 20 grand on 20 grand on Celsius. I couldn't I could never like fully build out my investment thesis. I know it's just like it's in the too hard category. Like some stocks are just too hard for me. I think it's a pretty decent deal when it was like in the 20s.
Probably.
But at the same time, I was like, I just don't know enough about it. And I don't want to force the issue with the stock. Like sometimes the stock's just not for me, right? Like I made some money, like when I was doing this segment with the Amit, I made some money with NVIDIA. But NVIDIA is just not a stock for me. Like I just don't know enough about that space. And I've also made money with Hood, like made 6 figures on Hood. But y'all haven't seen me like going back to the well because I was borrowing Amit's conviction. It was like if Hood went to like 15. Like
who's Amit? Is that the young guy with the glasses?
Yes. So like if Hood went to 15, like I'm talking about like I'm doing it right now, and I sold some puts on Hood because the Hood's is like 30 something, right?
Yeah.
There's just other places I'd rather have the money. You know what I mean? So, like, to me, like, that's a big determining factor whenever I sell a cash secured put. I sell these cash secured puts on Tesla at 220. It goes to 150. I'm excited. If I sell a cash secured put at 30 bucks on Hood and it goes to 20, I'm like, there's a part of me that's going to be excited because I do think that eventually Hood's going to go up and to the right in a big way. But it's just not like I'm just not excited about the company, though. You know what I mean? And then I'm not even on the platform anymore. So it's kind of like I don't follow it. You know, I don't watch like Robinhood Weekly and all this other shit or anything like that. I didn't watch the whatever the hell they did something in California here recently. I didn't watch it either. I watched like 10 minutes of it, and they were showing me puts and calls on the same page, and it was like revolutionary. And I'm like, what are y'all talking about?
Yeah, but you know, I think Hood is the next generation's tool to invest because
Yeah,
look,
agreed.
I hated the stock at 65. I shorted
Yeah.
it at 48. I covered it like last week. But the point is, Hood was a lot more risky.
Let me see if I can find your channel. Go ahead.
Hood was a lot more risky, you know, when it was in the teens, obviously. But I could unequivocally tell that Hood has the best UI, best setup for younger generation of traders and investors. Okay. The
That
other
don't
thing that's
care
going to
that
happen
don't
is
care
that
to have all the tools. That
there's this
don't
big
care.
money shift that's about to go happen, right? From baby boomers to their kids.
Yeah.
All those kids are already on Hood, right? I'm not making a huge bullish case on Hood.
No,
Although
I hear you.
I did buy the Robin ROBN, which is the 2x ETF of Hood yesterday, and I told TJ that. But my point is, again, none of this is trading financial advice, so we'll get that out of the way. I think Hood for longer term, with their money management capabilities now, they're catering to bigger accounts now. 25 million accounts already and growing faster than any brokerage out there. I think Hood at probably in the 20s is a comfortable thing to own for the longer term. Okay.
Yeah.
So we'll finish with this because I got to run. But Tesla or Hood, which one doubles first from here, wherever they are?
TSO.
Oh, look at that. Yes.
No, definitely Hood. I think Riot and SoFi double before Tesla. That's the
Yeah.
reality.
So I like Hood. I don't love. I didn't like it at 65. I shorted the damn thing, and I recall this. I was on your, I think maybe first time or second time, and I was shorting Palantir. Right? We recall that.
Yeah,
And
dude,
you so
you
much
showed how
hate
you
on
structured
your
the
thing.
trade. It was very creative.
Yeah, it was like right about 120, and I was like shorting the crap out of it. And I said, I said, I'm shorting it. I'm like, it's like, what is there to say? And people were like, oh no, it's going to 200. I'm like, okay, I must be right then because everybody thinks it's going to 200.
Dude, I put an order in to buy 500 puts on Hood when it was 110 bucks.
I mean, Palantir.
And I'm playing on Palantir when it was 110 bucks.
You didn't pull the trigger?
No, it didn't fill. I did a limit order and it didn't fill. I had gone out golfing that day, but I didn't want to say anything on the channel because I felt like I was like betraying the community. But I was like, this shit is so fucking overvalued.
There's no such thing betraying anything. It's your money. You do what you do.
I made $500,000 on this damn stock, and I'm gonna go make another $500,000 on the way down. Right?
You would have made more actually if you bought those puts. You would have made more.
But it didn't fill. It had a green day, and I never put the trade back on, and I've been pissed off on myself.
No, you got look. I'm long short. I go short. I go long. But you know, don't do what I do. Like TJ says, I do things that fit me, fit my knowledge base, fit my knowledge toolbox. It fits me. I've been doing it for long. It's just second nature, like walking to me. When I step in and buy stuff yesterday, sell puts, buy calls yesterday, there's a reason I'm doing it. But again, somebody asked that question. I'm going to answer and take off. Said, give us an example of sizing. Let me give you an example of sizing. Okay.
Sure.
If you have a $10,000 account, okay, it's simple. Let's go with a $10,000 account. Let's not go millions. You
Sure.
can put the zeros and go accordingly
All the
on
same.
your own
All the same.
that way, right?
Yeah.
You have a $10,000 account. You want to sell cash secured puts. Simple game. If you have a margin account, especially, which you probably should, right? Without going into margin, you don't need to.
Yeah. They don't trade like a $15,000 account.
Absolutely, yeah. So a lot of brokerages, like let's say a day like yesterday, okay, you have stocks that you really want to truly want to own. Okay, let's say you may have been a sulfide fan, or you may have been a hood fan, or whatever. I personally do not put more than 12% of my overall equity in any position. Period. Let it be cash secure puts, let it be naked puts, naked calls, whatever it is. Because I'm on Think or Swim, which is pretty similar to Tasty.
Yeah, same guy.
Actually, Tom built Think or Swim, so it's even their execution ping is the same thing. You know what I mean?
The cash register.
It is. So when I do the trade, right before it says review and send, right?
Yes.
It gives you what is how much buying power you're going to drain in your account when you do that transaction. Let's say you're selling a put, right? So if you have a $10,000 account and that transaction that you're about to put on is more than 1,200 buying power that is taken from your account, size down. And if it's not letting you do it, you're in the wrong stock. Don't do it. However, on SoFi, on Hood, a lot of them, instead of doing 5 puts, because you're looking at it, they go like, oh yeah, it's like $4,000. It's going to take me to sell puts on a $30 stock. Yeah, because it's 20% of the underlying plus or minus in and out of the money plus the premium. That's the calculation. But if you have a 10,000 account and Hood drops from 50 to 28 and you get assigned, where's the money to buy that thing, right? Yeah. So 12% is my goal. I'll put in 12. If I have a $10,000 account, $1,200 will go into that single position. Period. Done. There's 10,000 stocks. Pick your pain in each one, and always out of the 10,000, leave 25% in cash. Always. Cash is a position because you do not know what's going to happen tomorrow. For anybody that says, oh, I know what's going to happen tomorrow, you're full of shit. You don't know anything. I don't know. If I don't know, you definitely don't know. So be man enough to accept that nobody knows why the market does what it does. I don't know. I mean, I have my thoughts about it, but so 12% is the goal. That's the sizing that I'm talking about. And if it goes against you, don't add to it. Don't add another 12, another 12, another 12, another 12. Remedy it differently. Don't DCA in losing positions. You will be fine. You may not make as much as quick as money as you think you're going to make, but you will make money. You have discipline, you have money management, you have risk management, you will be okay. The key is to have longevity in this game, okay? Right. The key is to be around the next 5 years, like TJ will be and I will be and whatever. So that's the question I want to answer about sizing. So that's my thought process when it comes to sizing.
Very cool. Good stuff, man. Good stuff, Sergio. Appreciate you. And I've got to get going as well. I've got 3 FaceTimes back to back. Whenever the market's crazy like this, more people want to talk to me.
Yeah, well,
Wheelers tomorrow is going to be fun, guys. I don't know if you might be available in the evening, Sergio. We did the episode of Wheelers where we have other experienced or even not so experienced folks talk about stuff. But tomorrow's going to be a fun one. It's pitch your double. It's going to be like a debate format, if you will, elevator pitch. You've got 1 minute. Pitch me why you think Hood's your double, as an example, right?
Oh, okay.
So like, give me 3 or 4 or 5 bullet points on why you think Hood's your double. Might hear, okay, cool, the transfer. Well, that's cool. What are the metrics though, right? Because at the end of the day, people lie, the numbers don't. So it would be for somebody that's willing to do a little bit of homework on a couple of stocks that they want to pitch on what they think is the fastest double, because there's urgency there. Because if you're not beating the market, what are we doing, right?
Yeah, yeah, I agree. Okay,
I
yeah.
mean,
Well,
if
if I
you're
can
not
make
beating
it,
the market, here's the thing, guys. I'm going to leave you all with this. You want to get wealthy in the stock market, invest $200 to $500 a month and look up in 40 years and you'll thank yourself.
there you go. That's
Go
the way.
enjoy your life. Go make love your wife. Go golf. Go do whatever you want to do. But don't be hypnotizing the screen if you're not trying to figure out a strategy to beat the market. Go enjoy your life. Go get your side hustle on. Go focus on your career. Go do all of those things. But if you're going to do this full time, you got to figure out how to beat the market. If not, why are you doing it? Like, to me, that's just crazy.
Well, if you don't beat the market by 3x, in
Yeah.
my world anyway, maybe in your world 2x, at least 2x, you should not be doing this. You should,
Yeah.
because the risk of blowups are so high.
Big
Don't
time.
do it. So, like on a whatever, we're down what, 15%, 20% this year or whatever, right? How
Yeah.
many people are up this year? Okay.
Yeah.
So
Very good. Yeah.
actually, if you didn't do anything, you're up this year. You're beating the market handily. If you just kept the cash, if you just kept cash in Robinhood or collect your 4%, you're beating the crap out of the market right now. So, see what I mean? You don't have to be involved every day. Have
Yeah.
patience, man. It's okay. Markets open
Appreciate
every
you,
day.
Sergio. Appreciate you, my man.
Take care, man.
Bye bye.
Be
TJ,
well.
the real deal, signing off with Sergio. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.